just start with a just a brief intro to the background on the topic, just so we can define the terms a little bit. And I want to hear from our speakers and how they think about this and their investment strategy. So when we talk about alpha, you can think about investment strategy that has a particular benchmark or a particular market, whether you're investing in public equities or venture capital or private equity. There is an average return or a typical market return that the market will deliver. How do you outperform that benchmark? Well, you can do it by taking some additional risk and finding some opportunities that will have potentially some downside or more volatility than typical. And that we would think of as beta, a way to outperform the market in a high risk environment if the markets go your way. And then there's like a risk-free way to do it. How do you just beat the market without taking additional risk? And that's that kind of excess return or outperformance is alpha. And every fund manager I know thinks they have an edge and a way to beat the market systematically without taking risk. And certainly one way to do that is investing in groups where people aren't looking that hard and aren't investing as much as they should be. So let me just start with the group. Maybe Taj, you take it first. Just give us a brief background on your investment strategy. How do you think about alpha, and is investing in these historically underrepresented groups a part of that?
Yeah, Aman, thank you, and thanks to everyone for this exciting topic to talk about. So for me, with my fund, we look at it as an example. What we talk about in our thesis is the intersection of alpha, inclusion, and sustainability. I've been a clean tech investor for quite a long time, and that's a perfect example of an underrepresented sector that people really discounted, and that's equivalent for me for the groups that we're talking about. And I think you said it correctly. And right before this call, you and I were talking about the sports industry, and we were talking about the wonderful Dodgers. But one of the other things we were talking about was even looking at it from a standpoint of sports. There's a stadium that's being built in the area of Southern California where I'm at, in a city called Inglewood, that's been overlooked historically until Steve Ballmer came in, and now you have a lot of value that's being created in the ecosystem and in the area. I look at that similar to people who have been historically underrepresented. And one of the other things we really talked about among earlier also was this idea of cultural fit and cultural add. I think cultural fit to me says, let's find a Black person who may have went, a Black or Latino person since it's Hispanic Heritage Month, that went to Harvard, what have you, and now we have diversity. I mean, that's not it. What diversity is for me is a cultural norms and a different way of looking at things and a different way a person grew up. For me, I'm the son of immigrants. I came from a city that's not necessarily known for venture in Dallas, and so we had to be a little bit scrappy. And when I became a founder and investor, a founder first and then an investor, the way that we ran our company was with resiliency and a way to really kind of achieve revenue by doing it differently. And so I think that's one of the values that you can do as an investor. And for me, what we tend to look at is look for those opportunities that are not in the areas, not just on the coast, that is geographic diversity, and that we have the type of founders and the type of fund managers that are scrappy and that can really be resilient. So that's how do we look at it, Aman.
Excellent. And Deb, what's your take? What is your fund's thesis, and how do you think about diversity as part of that thesis or not? Does it enhance your edge? Is it an explicit part of your fund?
Yeah, I mean, it's an explicit part of our fund and our networks investing activities since we were founded in 2004. So when Golden Seeds was founded, and that was prior to me, it was basically on the thesis that public market data that had been done, right, by groups like McKinsey and others. I know you spent some time at McKinsey as well as I did. There was definitely research that was coming out in the public markets that having diversity in your management and on your boards was increasing performance, and those companies who scored better on those metrics were outperforming those who were lower on those metrics. And we took that philosophy and applied it to venture capital and angel investing, so the earliest stages of funding for women and underrepresented groups. And there was no one at the time playing in this field at the scale that we were. We've become one of the largest groups. We've funded over $150 million into gender diverse founding teams from our network, and they've gone on to raise 1.5 billion on top of that money, right? So, we're proving out the thesis in the private markets that we had felt should be there because of what we had seen and seen the data in the public markets. And to that, just to even build on that, to us, we view it as market arbitrage, right? So, we keep hearing, even still, in we track this data. We have a trends report we publish every year. Venture capital has not budged, and there's a lot of reasons for that that we keep hearing, but we're seeing returns, we're seeing good returns. We're funding a lot of really good companies. And for us, it's an arbitrage opportunity. If others don't want to play in that market, we're happy to. I see Taj smiling, right? So,
absolutely.
It's a market asymmetry, and we're happy to be playing in that. Now, do we want to see more women get funded? Absolutely. And underrepresented groups get funded? Absolutely. But, for right now, we're playing, we're able to play that arbitrage.
Love it. Absolutely. You're seeing it. I mean, if anybody, I'm pretty sure the audience was reading Institutional Investor. Today there's an article that's talking about the Latin American community, the Latinx community, and the loss in that. And it's exactly what Deb is saying. And right. And for me, because we're a fund of funds, and the reason we decided to become a fund of funds is just that. I'll be very frank. We had a lot of performance last year with the social unrest. They talked about diversity, talked about Black Lives Matter, all this stuff. At the end of the day, all of us are investors. So what's important to us is money. If that's really important, go to where the opportunity is at. $150 billion in venture was funded last year. You want to know how many went to not just Blacks, but Latinos? Well, I'll still give you a number. It's less than 1%.
Less than 1%.
What can change? And for me, what needs to change is, again, just like Deb said, if you're afraid as an investor to make money, allow me to.
Well, I mean, Taj, to your point, right? I mean, more money. We had an article that was published earlier this year, right, written by our CEOs, that more money went to Robinhood, right, in the first quarter than went to all underrepresented founders last year, right, in 2020. I mean, that's what we're facing here, and even if you look at gender diverse teams, forget just all female founded. And I apologize, my stats are more on the gender side than the full underrepresented. Although we do see that gender diverse teams do end up with more diversity across their companies in general. But what we saw is that even if you look at gender diverse teams, it's less than 15% of venture capital. Now, in an ideal world, gender diverse should be 100%. Right? I mean, maybe you'll have some margins, right, from a bell curve, some all male teams, some all female teams, but it's less than 15%. And so there's just a lot of room here, to be funding really good companies that are across, anywhere in the country. And for us, our fund is the Angel Network is sector agnostic. Our fund is more, as you heard Holly say, more technology focused. I was an engineer, undergrad, and my background was serving industrials when I was in consulting. But women are getting half the STEM degrees, right, out there. And so why wouldn't you be funding women in technical companies who are technical CEOs or CTOs or CSOs? But what we hear anecdotally is that they don't get funded. They're told, oh, you can't be a woman engineer and be a CEO, right? Whoever said that to a male engineer, right? And so there's just a lot of stereotyping still that gets done of what it means to hold these degrees and what you can do with them.
Absolutely. And let me add really quick to add on that really quickly. You want to know the most educated group of women in America?
African American.
They do. They have a lot of PhDs. It's pretty phenomenal.
It does my heart good to hear say that I'm a father of a 10-year-old and a 7-year-old. So I like the fact that we're getting half the STEM degrees to girls is it's great. My daughter does tell me, hey, Dad, math is hard. Can I go do music? Can I do art? And I say, yeah, I know math is hard, honey, but you gotta do the math, because then I show her the average income for people who graduate with math degrees versus average income degrees, and that's a lot more candy, a lot more toys that most people can buy.
I have to tell you, my wife was a classical music singer. I don't know. She's pretty good. So
Doing fine. She's that
But math
outlier
is
in the bell
hard.
curve.
Math is hard, right? But it doesn't mean you shouldn't do it,
That is
right?
exactly what I felt like.
And unfortunately, we're in a
Because it's hard.
society where girls are turned off by math by as early as third grade, and it has a lot to third and fourth grade. And it has a lot to do with how they're taught. But that's a whole other conversation I'm happy to go into. But
absolutely.
stick with it, right?
Let me click on this for both of you, maybe starting with Deb. So let's assume, so my last firm, Founder Startups, I think we're all seed stage, seed and Series A. So these companies need a lot of help, whether it's from their investor or just from, the network, right? Like the CEOs we're funding are typically 2 to 5 people. And so they need a lot of help. Yep. And let's assume that we invest in them. And I think over 20% of our batches were female led, or at least had a female in the management team, like one of the top 2 or 3 founders. So higher than average. And I think we're skewing towards 30 to 35% in some of the more recent batches. So definitely higher than average, but we were trying to think through how do we be helpful to companies. Once you invest, your responsibility as an investor doesn't really stop there, right? At least if you're an early stage investor. So you continue to be involved in supporting the founder in whatever way they want. How do we as investors have to think about supporting some of these groups that may not have some of the built-in networks or some of the maybe the traditional support that others founders have? Do they need to be treated differently? Do they need different levels of support or guidance, or is that something you think about in your investment thesis?
It is something we think about. So there's 2 answers. One, I'll call it kind of at the top of the funnel, which is we do a lot of outreach. We're a national group. We've got chapters in 8, maybe 9 cities now that are active. We do a lot of mentoring in the ecosystem. We do what we call office hours, right? Almost all our chapters do monthly office hours where anyone can come in and sign up for those, learn about what is angel and venture funding, if they're a good fit. They get half an hour every time they come with us and or some legal people we bring in so they can ask those questions and start working with them. So that's one piece. And we also, we partner with all the various accelerators that are out there to provide that kind of coaching and support. So that's one piece to help them be ready for the funnel, right? To envision themselves being that they can be venture backed eventually, right? And start thinking that way. The other side is once you've made an investment in those companies, and it is about opening the doors. And I think sometimes it's helping them realize the doors that they have. I say this to undergrads when I meet with them or grad students, which is don't just look at your female classmates as your peers, right? Are you reaching out to your male classmates or male, men in your alumni network or men that you worked with? I was lucky I had very supportive men that I worked with in my industries who are still supporting me when I reach out to them.
Yeah.
And so, but it is opening up those networks and teaching them how to use it appropriately, because sometimes they don't realize, and it's not, I don't know why that is, but sometimes it is even opening up then our Rolodexes if they haven't gone to the same schools, or maybe they don't have a graduate degree. Yep. And saying, hey, if I fund you, you link in with me. If you see someone that you think, if I may not think of the right person, but we ask our companies every month to send us what's your ask, like who are you trying to get intros to, and we send that out to our network and say, can anyone help them? And I think that's a power of a group like ours, where we have 300 active angel investors across the country, is usually we can find a first degree connection for companies that they need. And I think that's the power of a group like ours, because you need that. Any company needs that. But I think especially some of these that may not feel they have the network that they need.
Yeah, I've certainly noticed it doesn't necessarily line up by ethnicity or gender, at least in my experience, but certainly by geography. A lot of our companies come from outside of the Bay Area and they come here. I think half of the great companies in the Bay Area are actually founded by immigrants. Some ridiculously high stat, like 40% of the S&P 500 tech companies that are now in there it originally had a essentially non-US founder. So they're coming here without a network. They need to meet people locally. They need to source talent locally. And the immigrant founders in particular, I think we've seen they need help, and we've been helpful. Taj, in your case, like, how do you think about supporting the investees once you cut the check? Where does your responsibility continue, and what do you think they need help with?
Yeah, so for me, I'm a firm believer in simplicity through wisdom, and I talk about that the way I look to invest is what I call the 4 C's: access to capital, access to connections, access to customers, and access to culture. Culture for me means not just a culture of, like we talked about, a culture of racial diversity, gender diversity, geographic diversity, but it's a culture of excellence, a culture of ethics, and a culture of really doing things differently that your competitors are not doing. I think, and we're talking about venture, and I think what's happening, and sadly, I don't think that our peers in San Francisco see it, but there's this quote that says that it's not that people don't have the intelligence, or the ability, but it's the access and the opportunity. And what's happening is that other institutions or other areas are really creating innovative areas. Before I was an investor, I was an accelerator director at the University of California. And there are 10 schools in the UC system. And I selected University of California, Riverside for 2 reasons. Number one, it was a clean tech school before clean tech when clean tech was a dirty word, when nobody was really interested in it. And number two, it's the most diverse school out of all of the 10 UCs. During my tenure there, we made that university the number 4 place in the nation for minority entrepreneurs. And we did that by building this ecosystem of support that I talked about with the 4 C's. And so, again, I think the fallacy is that you need to go to the Bay to succeed. I think Chip and Calendly and so many other unicorns that are coming out, Honey, we just talked about, have told us that you don't. What you need is really smart people who are going to do 3 things, in my opinion. Listen as investors. That's the first thing we should do for founders, is listen to what they're talking about, provide sage advice that we always do. And then thirdly, work our damnedest to ensure that they beat all the competition in the market. And again, that's what we want to do as investors, both for fund managers and the founders that we invest in.
Very good.
Yeah, and I think, sorry if I could add one thing on that. I think there's something about the geographical diversity as well, right? I think it's really easy if you're in the Bay Area or Boston, I think even New York now, right? To go to the various events and learn and do things. It is much harder if you're outside of, like, say, those 3 big areas. And I find I do spend time at my alma maters, especially my undergrad, because it is more remote and harder there. And it's worth me spending the time there to work with the younger founders to help them understand what they could be doing and get those connections in, because it's much harder for them to do that if you have to drive 6 hours to go to a networking event, right? Versus just pop in after work one day. And I think that helps us create alpha, because we are looking at those outer regions and we have those scouts in all these different places.
Yeah,
totally. Let me just open up the attendees. If there are any questions, just feel free to click on the chat or the Q&A, and we'd love to take questions. And I'll watch for those questions as they're coming in. As we do that, so let's talk about geographic diversity and the ability to then source the talent we're talking about, because it sounds like you both have an angle in finding these talented entrepreneurs through your networks, and a lot of successful VCs are they're here on Sand Hill Road, or they're in South San Francisco. They're in LA, but even when I say they're in LA, I don't really mean they're in LA. They're in like Santa Monica, and they're in West LA and West Hollywood, and maybe down to, maybe just like a third of LA is really where it is. And then there are some, and New York's and Austin and maybe Seattle and Boston have some centers. But if you're really hunting for talented founders and companies, and they're not in these hot spots, where how do you go about finding and sourcing these entrepreneurs? Like, what do you rely on your network? Are there accelerators you go to? Are there any, without giving away your secret sauce, what's your MO, or what would you advise fund managers out on this call? Like, how would you go about in sourcing these companies that in non-obvious places?
Yeah, if I may, I think this pandemic that we're in has been horrible, and I've lost family members, and God bless anybody who else has lost family members. But the flip side of that is that it's been great from a standpoint of all of us in different places, and we're all having this conversation. Yeah. Granted in our spaces. So I say all that to say that technology has allowed us to be able to find some of the diamonds in the rough that we normally would not have found on Sand Hill Road. Which again, you're being able to find some really great founders in places that you don't see. And I keep utilizing. If you want to use some real life examples, I think there was a question in the chat. If you go back into the returns that Honey did, and I want to remind you, Honey tried to raise money on Sand Hill Road, and everybody told them no.
Interesting.
Look back how much they made and the funds they made in those funds that invested in honey are funds that were smaller funds that were made by people of color and women.
Yeah.
And it was a really great return. The same thing with the African American led company out of Atlanta called Calendly, that is a unicorn now. A lot of people missed out on, and now are scrounging to see it. There are others out there, and I think that, yeah, you're right. There are a number of programs and other accelerators that are out there. There are a number of organizations, as an example. Again, we said this is Hispanic Heritage Month. There's an organization I'm a member of called BC FINIA, which is based up of a number of Latino investors that have deal flow. There's a group here in California called Cap Table Coalition, where it's nothing but a lot of us as investors making investments in companies that we know of that are led by people of color. And so I think now it's different, but I'll be very frank. I think, we have to work harder now as investors, and we should work harder to find the really great opportunities and not just wait and sit at Sand Hill Road for them to come up to us.
Yeah.
Those days are gone. And again, I think the great thing about it is that it's great opportunity for all us to really dig in and to achieve alpha, because again, there's going to be some really undervalued companies. I leave it with this. The reason that I like to look at geographic diversity is that when I was at Riverside, I would recruit companies from the Bay to come to Riverside. And people would say, well, it's Riverside. I've never heard of that. And I would say, you heard of Coachella? And they're like, yes. I said, well, we're Techchella. And one of the things that I said is, you have an engineer in the Bay Area who may have went to the same school is going to cost you $180,000 because of the cost of living.
Oh God.
Riverside, you can get it for half that amount. I'm going to write a check to you, and I want you to be financially prudent.
Yeah.
Tell me which ideal you should go with. The same talent, different area, different cost of living. We're not making right economic decisions. And remember, I'm an economist. So I'm looking at everything from an economic decision. And if we're truly making economic decisions, historically underrepresented groups and historically underrepresented areas make the most sense.
Yeah. So before the pandemic, I always said, trying to find companies or, doing this type of work, it's a full contact sport. You got to be out there. You got to be, at the events. I think to Taj's point, you got to be out there looking for the founders and getting them before their fundraising. You got to start building relationships before their fundraising, because you want them to want you on their cap table, right? I think for really strong companies, you want them to be making room for you on the cap table. And so you have to know them before they're fundraising for them to want to do that. Because as founders, I always tell founders, when I do my outreach and our office hours and talk to them, it's, you're getting in with the stage we're going in, you could be with us for 10 years, right? Or any deal, right? I mean, it takes a long time to build a sustainable business that is going to be unicorn status or get to a successful exit. And you've got to be comfortable working with those people. And so I'm a relationship person. So it's about trying to build relationships with them before they're actually fundraising. So they want us in that, in their deals. I think is my short answer to that question.
Yeah, and if I may, to Deb's point, when many may know, again, clean tech is, I'm happy now because 2 years ago I couldn't get my fellow investors to pick up a call on clean tech, and now clean tech is the hottest thing, so I'm loving it. But when I was at the Los Angeles Clean Tech Incubator, one of our most popular companies was a woman-led company by the name of Repurpose, that built, I should say, plates and cups and everything out of plant-based materials. The reason I mention this is that when we think about clean tech is very homogeneous, and I'll leave it to you to see where the homogeneity lies. Okay. But she was an outlier. And again, if we're really looking to make money and we have a fiduciary responsibility to make money for our investors, we want to go to where those outliers are at and really kind of make those investments. And so again, to Deb's point, race, gender, geography, those are things that we need to take a look at to really achieve alpha if we're going to do it. And again, I hear a lot of people say, well, give me the data. Similar to the vaccine, the data's out there. I don't know.
So Taj, you made me think of another point though, which is I actually think it's been easier, right, during the pandemic because everything's gone virtual. So I actually find I'm seeing more things from across the country, or was able to attend more events with some groups that, it's harder if you have to travel half a day or a day to get somewhere for some of these events. That
Yeah.
I'm actually a huge fan of virtual now. Now, I
Yeah.
will admit, I actually did some deals prior to the pandemic without actually meeting the founders in person, because we always did everything versus Skype. I had been an advisor. I was asked to advise them, turned into a deal, right, because of the connections I made for them, and then actually personally invested. But we had never met in person until about 18 months in. So there's this whole thing of, I got to press the flesh. I got to go have the dinner. Well, if it's a SaaS company, what are you going to go see in their office? Except a bank of computers, right? It's different for some of our hard tech where I want to go see the lab or things like that. But most of the time, you can do things this way, right?
Yeah.
And you could be doing your checks and your reference checks to make sure everything checks out. But I think I think there's this balance now I'm going to be trying to seek as things reopen of, is that really worth my time to go in person if I'm just going to be seeing the same people versus I'm going to invest in something, where I'm going to meet some different people, or I could go be doing something in Texas that I wouldn't normally try, maybe I wouldn't travel to.
Just do it virtually. Yeah.
We hope you go to Texas. And
not just Zoom, but in person.
Yeah, but I'll tell you, you're right, Deb. And I think another thing is really interesting. I'll be very frank and very transparent. I think, and we talked about this. A lot of times we'll have these panels, and a lot of us of investors, we kind of shy away from what we really feel. So I'm usually not the partner to speak of my firm because I don't have a backspace button on my mouth, as you can see. But
we'll edit out anything you say that you regret. We'll edit out in the final.
But one of the things I tell you, when crowdfunding and crowd investing, like not Kickstarter, but more so Republic and WeFunder, I wasn't a fan in the very beginning because I just didn't understand it. I was just like, you're going to have 100 just people on a cap table that should not be. But what I really learned over the course of the time with them is that before the pandemic hit, they were already doing all this stuff online. They already understood how to do diligence and do it online. So a lot of the things I've been doing now is looking at how to really increase it. And Deb is right. I think this is not going to go away. It's one of the reasons I invested in Bevy as a personal investment.
Yeah.
I think that it's going to make us a little bit more efficient. And I think, again, we're going to be able to find those founders that are there. Even on the horror side, because that's one of the areas I invest in. With a fund, we had a drone do a look over of the facility for diligence that we were doing. Really interesting. Now, granted, it was a drone company, but it was just a way we were thinking intelligently. This idea that, one of the things I say often, and I tell founders this as well, and I said it as a founder myself, is we're going to find a way to make one. And that's why I look at the investments that I make and try to look at the diligence. Does that mean that we don't, or we're going to get away from pressing the flesh and really meeting the person eye to eye and ensuring that we don't have it? No, but I think that a good majority of our investments, as Deb said, it will be more efficient and checks will be written faster, and you have a greater leap because of that. And let me leave you with this. A clean tech company by the name of Charger Hub is an LA-based company that just finished their first seed raise, a little under $3 million, but really kind of rocking the area of workforce, intersection of workforce and clean tech. A year ago, the company wasn't even around. The founder, African-American woman, Camille Terry, she didn't believe because she was a woman of color, that, and she sees the stats, that she would be supported. It took us as investors and me as an investor of color to say, you can. And then also as an investor of color to put a check into her. And now where she's at, she actually turned away $8 million from our first round. So again, if you don't want to make money, allow me to.
Yeah, I love that. I love that story. I love that story about connection and support of a founder. Are you both? So I was just at a private equity conference, and one in London, one in Boston, where I think a majority of the folks that I heard were like, now that the economy is open, we want to meet people in person. We do it. We've done it in the past year, but that was unusual. And they're really insistent on meeting fund managers and companies in person and continuing that personal connection. And, and that I think will continue in private equity, although I'm sure there'll be some relaxed standards. In your cases, do you two have offices? Do you go to the offices? Do you insist on meeting, to what extent do you insist on meeting founders before an investment or having that kind of personal connection? Or do you just now without that personal meeting, do you do investments, follow-ons and everything else? It sounds like you've liberalized your standards a little bit, at least.
We were doing it before. Again, we're a national network. So, it's We write checks without seeing people in person. Again, we're
So
doing
none of
one
your
right now. We're
none
yeah,
of your venture partners have met them, or no one on the team has met them. You're just a couple
in
of Zoom
person.
calls and that's it.
Not necessarily, right?
Yeah.
Now there is one we're looking at where it's a lab services business. I guess someone's going to go check out that lab next week, right?
Yep.
But it's someone who's there. I don't have to go. I've got someone in our network who's going to go do that because it's a couple hour drive for them to go check it out. But
yeah,
to me, like if it's a software company, why? And one of our CEOs has said this, like they've actually gone. So we do have an office. It's not open, right? I mean, well, actually we gave up our office space. So I've always been remote. Most of my partners are in New York, or my partners in New York. So I've been remote. Am I looking forward to getting back into an office environment? Yes, just to be part of an ecosystem. But to me, it's not necessarily crucial. I've worked virtually for 20 years, right?
Right.
So
Right.
the pandemic for me was fairly normal. I just had more people in my house, my home office, like fighting for my home office.
Yep.
But to me, it's perfectly normal. And I want to give an example of one of our companies, because I think companies are taking different views on this. I have one portfolio company where they've gotten rid of their office space. They've gone completely virtual. They're a SaaS company. They have been able to get better talent because they've gone fully virtual. Now they will spend money, right? They're going to take that money they would have spent on rent and have empty seats to be able to bring people together a couple of times a year to make sure that, to Taj's point, that culture, I think, is a key thing of how do you deal with the culture piece of it. But, they feel they can do it. We have another company where, nope, she wants everybody in the office, right? And they've got space in Manhattan, and that's what they want.
That's the
SaaS
culture
company as well, right? So, it's going to depend on the teams and the culture of those teams on how they're going to do it. And for us, it's the same. Again, we're a national group, right? So we once a year we try to get folks together. We have a big event. We bring everybody in our network in. But other than that, it's doing it via this way and building trust.
Yeah, totally.
And I agree. I was going to say, for me, I'm based in Los Angeles. My other partners in San Francisco. We have a partner in Boston and a partner in Atlanta, so we can kind of have the piece of it. I because before we do, and from a direct standpoint. So let me clarify. My apologies. So from a fund standpoint, we invest in fund ones, fund twos, and fund threes that are led by women and people of color. From a direct standpoint, we like to do late seed A. And so for me, because I'm doing a little bit of seed, I like, team is important, founder is important, people who are running is important. So, what we've been doing is we've been doing these ecosystem dinners, and we would go through different cities that we kind of have exposure in, that we want to have exposure in. We meet with our either our LPs, our ecosystem partners, accelerator directors, and some of the founders, so we can kind of, again, that connection piece of it. But I'm not, for me, I'm okay. I think the idea of work is changing for us. And the idea of what office means is changing for us. Do I think we need to have, a bit of everybody together? Yeah. And so for us, what we're thinking about is, even if we may work from home, probably once a month, we'll convene in a similar space, so we can keep that culture and keep that need, because we're human beings. We need that connection. But I think for me, I try to, writing the check, doing the diligence, somebody in my network has to know this person or be there. And I think, again, that's the benefit of having that connection, that access to connection. And so even if this has been a situation where I haven't met a founder, and I'll give you a perfect example. I think the audience here likes to hear or are looking for concrete examples that Deb and I have been providing. There's a company by the name of Spark Charge that I met in upstate New York, in Syracuse, and in the EVSE space. Never met him before, but I like what he was doing. Underrepresented founder, grew up in Texas. So for me, that's an example of a person who didn't come from the coast. He didn't come from the Silicon Valley arena, but he's a really great product that I think is really great. I recruited him out to come to LA, came to LA and did really great. And then another thing that we really did with him as well, we put him on television. He was on Shark Tank. If you saw it, Mark Cuban ended up becoming an investor. And now they're going to their Series A at 20 million and $100 million valuation for this company. But I'll say all that to say, it started out with me not even meeting him face to face. It started out with me liking the way he ran his company, hearing him on a number of different things as well. And now it's a great relationship we developed.
Yeah, I think a lot of it comes down to how can you build trust, right? And so, there's ways that you can build trust online, right? It's not necessarily being in person. And I think part of it is you have to be open to where people are at. And as I said, I've worked remotely for 20 plus years, right? And
Yeah.
so but I worked with people who
Unusual, though.
trusted that and said, yeah, I know you're working when you're not in the office, right? But
Yeah.
I think we've seen over the last year and a half that, I've had so many people, heard so many stories of people saying, oh, well, I didn't realize people actually could be productive at home. I'm like, oh my God, where have you been? Right.
Yeah,
But I think
you're a
there's
little
some that saying
unusual.
you can't. And there's certain industries where, yeah, you've got to be in the office, you got to be with a client or certain things. For us, I'm not so sure, because once I invest, I'm not with them every day, right? I got to trust people I invest in,
Right.
that they can run their business. And I'm going to see them at a board meeting or when I do a check-in call, right?
Yeah.
As an investor update. Like, so why do I feel like I've got to, have all this, this in-person interaction when they're going to be remote all the time anyways?
Yeah.
Yeah,
I think that
and in addition to that, and again, I'm being very honest, and I might get in trouble, but Ozzy, they were in person. Stuff still happened. So again, person will not equate to what's going on. At the end of the day, it's a trust factor, and it's a risk that we're having in trusting people, whether we've met them in person, whether we've met them online, whether we know them for years. And again, that's human nature.
Yeah. I've got a couple of questions in the chat that are they're very like bottom line oriented, dollars and cents type questions. I think we have a lot of accountants and economists on the call, not a lot of do-gooders and social impacts, but a couple of questions around the actual and expected performance and the does investing in these groups systematically generate alpha? What do we think? What do we know? What do we expect? I'll give you my quick take, and there's some stuff on PitchBook I can reference, but I think if you were to look at just on the gender point, if you look at all male founders, all female founders, or like a mix, how have those investments been doing, and what do we expect? I think if you were to look at it today, you would probably find, remember that venture is very much a game of outliers. So the Stripe and the Ubers and Airbnbs are going to drive much or most of the returns in venture. That's just a power law dynamic and how these things work. I would suspect over the past 5 or 10 years, we've seen pretty similar performance between like all male and then mixed gender teams. Certainly at my last firm at 500 Startups, we looked at this and we were just looking at intermediate signals between who gets a first markup, who gets a second markup, what are the step up valuations. And I think we've found, not outperformance, but generally performing the same. All female teams, they're kind of rare. We didn't invest in, we couldn't find that many companies to invest in. There were certainly some very good ones and very successful female CEOs. And I think in our case, anecdotally, and refer to some anecdotes here, around companies that this team is invested in, there's some of the best performers. Like our best performer now is Canva, which is a Australian SaaS company. CEO is Melanie Perkins, and we didn't invest in her because she was a woman or out of the Bay Area. I think my partner just said, "Hey, I like that company," and he jumped into the seed level, and now they're worth 40 billion. So I think we've seen systematic outperformance from female founders. I think in general, it's sort of unclear, but they're not underperforming. And it's still kind of a fairly new thing, right? Like these, all the I think that you mentioned the percentage of companies getting funded that are all female or have female CEOs. It's still on the order of 5 to 10%, maybe recently getting
less than 5.
Less than 5.
All female is less than 5. Yes.
All females less than 5. And
yeah,
so it's going to take 5 or 10 years to know.
15.
Right.
Yeah, I think
it'll
you're
take a while to
absolutely
know for sure. But I think the early signals and what you expect, and just identifying this market arbitrage. Do you think over the next 10 years, all female teams, mixed gender teams, BIPOC teams, do you think they'll outperform, do better, do worse? How do you honestly feel about the market returns?
I'd be happy if we were at, had the right percentages of money going and we're at par, right? So that we don't need funds like mine anymore, right? Would be where I'd see we're going. Right now, what we're seeing in terms of performance is our broader portfolio, because we look at who's still operating as a percentage of companies we've invested in. That's higher than the industry average, right? To be expected from a risk perspective for women. They also tend to bootstrap, right, and get to revenue faster. There's some data coming out of Mass Challenge that shows that female founders or teams with female founders, not all female teams, but gender diverse teams, outperform in terms of revenue generation by 2 to 1 per dollar invested. That came out of a study by BCG and Mass Challenge a couple of years ago. And that says by how many of our companies are still operating as a relative percentage of the portfolio. We are just starting to see, we've had 2 IPOs in the last month. in our, from our companies,
Yep.
which to us is a huge sign of progress. Now it takes time to get there, but remember when we started, it's been less than 5% of,
Years,
of
yeah.
venture goes to female founders for years. So we're starting to see things moving in the right direction just by the volume of exits we're having this year,
Right.
both through acquisition as well as IPO. And we think that will continue. That ball will continue to to roll moving forward. So we're seeing positive signals. We were investing based on this thesis, and we're starting to see it proved out. But it's taken time, right? When you hear those numbers of more going to Robinhood than all all female founders last year, right? Until you have those chances, and there's been female founders who say I wasn't given 50 million to fail, right? And I do think a lot of times, again, this is anecdotal that we hear, but when women don't do so well in their first outing, they don't necessarily get the second chance. That some of the male founders do, where it's like, oh, well, I'm going to invest in them again because I know they've learned already. Well, a lot of times female founders aren't given that opportunity. Or I've also had them say, I have female founders who've had very successful exits, gone public with their companies, and have trouble fundraising for their next company.
Yeah.
Go figure. Right.
Yeah.
I mean, so I think we just have to understand our own biases, and I can talk about that, right, in terms of questions we ask, underrepresented founders versus your traditional what we view as a traditional founder. There's all sorts of data out there and research of how we ask questions very differently. Even I, as a woman, will ask women different questions unless I check myself.
Yeah. Right? How dare you?
No, I'll ask them those risk questions, right? Because that's my nature. But I've got to remember, like, am I asking the right question for a Series seed investment, right? This should be about potential, right? Even Series A is more about potential than performance. And women are always kind of measured on performance. And I think underrepresented minorities as well.
Yeah.
Sorry, Taj, go ahead.
No, you're preaching the gospel, and I love it, and I totally agree. Absolutely. And let me add to this. I think, Aman, to your point, investing in historically underrepresented groups, it's not about doing good. Again, it's about making money. I always say that, and again, I
not philanthropy. We always say it's not philanthropy.
It's not just
I'm not an impact investor.
It can be for others, but you and I think, Deborah, we're profiteers. We want to make money off this.
I'm not an impact investor, but I realize that every investment I make makes an impact.
There you go.
Every investment I make is going to have an impact on communities, impact on the environment, impact on all the stuff, and also my wallet.
Yeah.
So at the end of the day, we want to make sure that we're making the right investments and we're going towards it. And I think all the time too, again, it's like, I think, when we're talking about investing in historically underrepresented group, we're not just saying find the next Black guy, the next woman, or the next Latino person to invest in. What we're saying is don't miss it on an opportunity because they're a woman, because they're Black, because they're Latino. And again, if we're talking about data, and for those of us who are like me, are numbers driven. Again, there's so much data out there, so we can't say I need to see data to make this decision. No, what you need to do is stop the bias.
Yeah,
you need to do is just really say and be honest and say, do I want to invest in a really great company that's going to make really, really great returns? That's really going to do it, and if so, then allow some of these companies, some of these founders to listen and pitch and listen to, really, really great. One of the things that I've been doing, and I've been telling founders that I used to do, is that I would have them send me their decks, and I didn't want them to put their pictures. I didn't want them to put their names. Right. That way we're looking at data. We're looking at the numbers. Because even for me, I have some biases, and I'll be very frank. I have an MBA, I have a PhD. I realized myself as an African-American man, Afro-Latino, I have my own biases. And I met this young gentleman who had this company called Very Cool. He didn't go to high school. He didn't even go to college. He was a former criminal, former gang member, but he ended up having 19 patents and raising $16 million with an alternative packaging company.
Wow.
I may have missed out on the opportunity because my own bias on educational bias. And so again, we have to make sure that if we're in the job of being investors, we're in the job of making money. We look for arbitrage, as Deb said. We look for opportunity. Those opportunities can come in many different shapes, sizes, and colors.
So I think, Taj, there's something else you said, which is something, I mean, Aman, you sort of were laughing at me saying, yeah, we ask like the same questions, right? The wrong questions sometimes of our founders that we're looking at. But we also, had to look internally and say, are we diverse enough? Like, are we looking at more diverse, like the underrepresented founders? So gender, yeah, we have, but wait, are we seeing enough, minority women, right? Or Latinx, Latino women? We had to really reach out, and or we're now working with some other groups and making sure we're doing even more outreach than we were, because if you just sort of sit back and say things are going to come to me, well, they're going to come to you from people who look like you.
Yeah.
Right. And, and going back, I literally had to talk to some of my business school classmates and say, we didn't have minority women in our class. I think we had one Latina in our business school class back then. Right. And so we're like, holy cow, like I've got to really do a lot of introspection and reach out, right, and find these groups. And so I've been doing that. Like I've been trying to go to different, network with different groups and outside of even the Boston area to try and find some of that. Like, I think I mentioned this in our prep call, like Providence has a much more diverse founder network than some of the mainstream Boston venues do.
Yep. So let's say you are what advice would you have for let's say you're a company or a founder that maybe has a background that isn't I didn't go to Stanford, didn't work at Google. I'm not like an engineer at Facebook for 3 years or PayPal, and I don't have the traditional background as a founder. How would you go about finding venture firms like yourselves or others that would take a chance on you, that would invest in you and give you the connections, the capital, the other two C's, I can't remember, customers and something else, culture, I think it was, right? How do you go about finding those companies that are supportive of these types of investors?
So I think there's groups, I don't know about pitch. So for us, I know, go to our website and sign up for one of our office hours, right? It's that easy. Sign up for one of our office hours, you kind of start getting into our system. And there's ones all over the country that would match the time zone that you have. We do only invest in US based companies. That's one thing I should put out there. Yeah. But then I would say, if you have gone to any school or university, definitely be tapping those alumni networks, right? Wherever you are. And then depending on the city, most cities now I think have some sort of economic development, right? I think it's just getting out there, and you have to put yourself out there, right? And Taj knows this as well, because he raised a fund. Like, you got to be willing to accept a lot of no's. You got to put yourself out there and have,
I get a lot of no's. Take the beating.
But just go out there and try and meet people, and I always say assume goodwill. Right. I never assume ill will. You have to assume goodwill. So I had a founder say to me, she said, yeah, like I had realized I was going in with a chip on my shoulder. And, and then she said, I had to take that chip off my shoulder when I went in and just realized, just go in. I also had a male founder say to me, he's actually one of our LPs. And he said, Deb, I got asked those questions as well. I'm like, okay, good point. Just realize like getting an investment's tough. And
it's always tough. Yes.
You got to kiss a lot of frogs before, you're going to find your prince or princess.
Now, as an LP, if you're looking to invest in a fund as a limited partner, let's say you're an investor and you're like hearing all this good stuff about, there's all this potential for alpha and return. Other than, so obviously we can come to you, Deborah, your website, and I presume you're talking to LPs, but what are other ways to get at VCs as an LP that wants to generate some of this alpha or be able to identify some of these opportunities for co-investments?
Oh, as an LP.
As an LP, yeah. And then same to you, Taj, in a second.
Yeah.
So for me, I guess it's just reach out, right? I mean, reach out, and ideally a warm intro is helpful. I get a lot of inbound stuff that looks pretty sketchy, on my email. But we're always looking to syndicate deals and find good deals. And as an LP, if you want to be coming in, feel free to reach out on. I always say reach out on LinkedIn, and we're happy to have the conversation. A warm intro is a little bit better, but I've got a pretty big network on LinkedIn, so it's usually pretty easy probably to find a way into me.
Yeah.
I don't know if that answers your question, Aman, or not, but from an LP standpoint, yeah, we're not fundraising right now, but we probably will be back out in market, sometime probably next year. But now is the time for it to be talking to us, right, about that.
Yeah. And I'm on to your first question about the founder. I think now, to Deb's point, you have accelerators and incubators all around the country that can really kind of help cultivate a lot of the needs that the founder would have before they reach us as investors. You have a lot of programs that are out there. There's really developing talent to come in. I think what I would say to that founder who did not work at Google, who did not go to Stanford, I would say, let me invest in your company so you can hire the folks that went to Google and then went to Stanford. And it worked for you like they did for me, because I was a founder. I went to Texas A&M, I went to Pepperdine.
You've been there.
I didn't do that, but I ended up hiring folks who worked in famed companies, and so I think that's there.
You're a PhD and an MBA, and you're
that helps too.
You don't count. You don't count as the underdog, my friend. You're the man.
But that helps. But and then I'll tell you for LPs, yeah, I definitely we're a $250 million targeted fund. We're coming around our first close. We're happy we're actually providing capital to other funds out there. I think one of the questions in the chat was, what do we consider micro funds? We typically like to do funds between 25 and 100 million, but I'm seeing a lot of sub 25 million funds that are really focusing on getting into the niche and finding great opportunities to bubble up. But I think it's LPs and to the LPs, it's really getting exciting now. I think, because I think there are more funds coming to market. That means for LPs, you have a lot of different opportunities to take and invest in. And for us as investors, it's been competitive. We're not going to, again, and I'm bagging on Sand Hill Road. We're not just consider Sand Hill Road and wait for opportunities to come to us. The competition is going to be first, and that's great. At the end of the day, we would tell founders all the time to disrupt their industry. Can you tell me the last time our industry as investors have been disrupted?
Yeah.
And we are.
No, not. So I want to also respond to one thing. I think I didn't answer part of the question, Aman, which is around for folks who don't come with that background. I don't really care so much, because I sometimes see it on a slide and I'm like, but what did you really do there? And what I care about is, do you know your target customer and that market? Right. And are you hitting we talk about painkillers versus, vitamins, right? Like, we want the painkillers. And I don't care where you came from, right? Because once you graduate, it's your industry, again, from a school standpoint, it doesn't matter. What is your industry expertise, and are you an expert at what you're trying to go do? Right. Because I don't necessarily want you learning how to be a CEO on my dime, but I don't want you learning your market on my dime per se. And so a lot of our founders have come, like, they've had industry experience, maybe don't come from some of those environments, but boy, they know cybersecurity because they've been in it for 20 years. Right. And so, like, that's what I care about. And that's what I think is if you are a founder, that's what you should be pushing, versus necessarily, if you don't come from those schools, right, realize then you got to find the people who know your industry. And that's where you go to places like PitchBook or Crunchbase and see who's investing in companies like yours, right? Do your homework and understand they're only in consumer, then don't go talk to them if you're a SaaS company, right? And so, and the LP should be looking at that as well of, what are the types of companies these people are investing in? And does it match?
And real quickly, for those who are on the phone that can't see, I'm nodding my head in total agreement, because at the end of the day, what we have to really realize is the schools really isn't about the information they're learning. And let's be very honest. What it's about is the network that they're building at these schools. So if I have a person who did not go to that school, but they may be but again, they have to access the network, they built that network, or they're gaining that network, that's just as valuable. And again, that's the one thing we need to look at as well.
Just if there are any LPs in the audience who are looking for funds to invest in, I would just say, just reach out to the few of us. There are a lot of great funds that are focused on the area. There are just nuances and subtleties in their investment strategies. And you want to think about, the manager and their track record. My colleague and I have a fund that's focused on, diverse background managers, but we're profit motivated. And so so we will not pass up an opportunity just because of skin color or gender. If it's a, white guy from West Virginia, but the team might be, Latina or African-American or have women on it, we would still, give that full consideration. Some funds do, some funds don't. So I just reach out to the group of us by LinkedIn or email, and we'd love to help you find, if not one of these funds, then the right fit. There are a lot of good ones out there. You just have to have a little bit of a, jungle guide. maybe just this, maybe a 30-second wrap up from each of the speakers. We're at about 12:58. And so I'd love to just hear your final thoughts, and then we'll turn back over to Holly.
I'll start. I'll say, thanks. It's been a great, fun discussion. And I guess to your point about LPs, I think they can really help drive this change, right?
Yeah.
By looking for, by redeploying their capital in these types of funds, and eventually then to the founders and entrepreneurs underneath, not underneath's the wrong word, but that those funds are investing in. I think LPs really have to start helping change this funding ratio that we have.
Yeah. And thank you, Deb, and thank you, Aman. And I think, thank you for everyone for this conversation, really timely. We're in a golden age of capital. We're in a golden age of innovation for our country. And I think it's an opportunity for us as investors to really provide alpha for our LPs in return. And again, this is a great opportunity. I appreciate everyone, the conversation, and today's talk.